Welcome! We will take an in-depth look at the risk assessment process within the software, examining its key components and how everything comes together. Risk assessment process is divided into two phases: planning phase and finalization phase. During the planning phase, an initial risk assessment is conducted to identify areas requiring focus. On finalization phase, risk assessment is done once again to highlight any new risks. If the new risks are identified, extent of the audit procedures is increased to cover those risks. First of all, materiality is selected. This can be done from the materiality form. Press the Add button or Ctrl-N shortcut to add a new record. Click on the stage column in the grid. Select Planning Stage or Final Stage, depending on what stage of audit you are. Then press on the Materiality Group column in the same row. You will notice all the materiality benchmarks open in the selection menu. Select the materiality benchmark you want to select. Now another window will open. This window will load the figures from balance sheet and income statement as per the financial statement mapping. Check all the boxes for the materiality benchmark you selected earlier. This will calculate the figure of the benchmark you selected. Now enter the percentage amount in the percentage column. Materiality amount will be calculated automatically. You can enter multiple benchmarks in the grid and then check the box in the materiality column to select the amount you want to use. Only one box can be checked at a time. Once you check a figure, you will notice the amount in the fields below will also change. Click on the Save button in the toolbar now, or press Ctrl-S shortcut to save the record. Now we can perform area-wise risk assessment. This is done via CRA Combined Risk Assessment form. This form uses the earlier selected materiality to calculate some thresholds and use those thresholds to calculate a sample size. This sample size is then used by the team member while performing audit procedures relevant to their area. Let's start the risk assessment process. Open the CRA form from the Planning section of the side menu. Once the form is opened, click on the Add button from the toolbar above, or press Ctrl-N for the shortcut to insert a new record. Click on the Planning Final Stage to select the stage of audit you are assessing these risks. Click on the Financial Statements field to select if the risk assessment is being performed on the draft statements or final statements. Now press on the Account Title field to open a selection menu. This will contain all the trial codes from the trial codes, for which risk assessment is to be performed. Some trial codes will be filtered here. This is because some audit procedures are of such nature that applying them allows the auditor to verify a substantial portion of the population. For such areas, a separate risk assessment is therefore not required. Such areas can be added in the software to exclude them from risk assessment under the Combined Risk Assessment form. More on that in a separate video. For now, select the trial code you want to perform risk assessment for. You will notice the closing balance field has automatically fetched the balance from the trial code. In the Worked Upon field, you can simply type Closing Balance. The Nature of Account field has been filled automatically as the software recognizes the trial code as an account balance. Now we will assess the inherent risk by separately assessing its two components: the likelihood of the misstatement and the magnitude of the misstatement. Likelihood of the misstatement is determined by assigning a score from 1 to 5 for each assertion. Higher score represents an increased likelihood of misstatement, while a lower score represents a decreased likelihood of misstatement. While assigning this score for each assertion, careful consideration is given to inherent risk factors, including complexity, subjectivity, change, uncertainty, and susceptibility to misstatement due to management bias or other fraud risk factors. Now start assigning the score by selecting the score from the drop-down or typing the score from 1 to 5 for each assertion. Next comes the magnitude risk score. The magnitude score can be assigned from 1 to 3. The software automatically assesses a score of magnitude for you. If the team member is not satisfied with the score assessed, he can assign a magnitude score of his own in the magnitude risk score assigned field. Now the overall inherent risk has been determined. Now we will select if we are relying on the entity's controls or not. Click on the drop-down menu and then select the relevant option. Note that here we are only selecting our decision of relying on controls or not. The rationale behind this conclusion is reached after detailed consideration in the planning checklists that we allocated earlier in the work allocation form. After the control risk assessment is selected, a combined risk assessment will be calculated by the software. This will also result in population of some other fields. Tolerable error and SAD is calculated. A risk matrix exists in the software at the back end. It can be modified. It identifies what testing threshold percentages should be applied under various combined risk assessment for a class of transaction or account balance. This testing threshold percentages are provided in the form of range. The team member can determine what percentage to apply, but it should be within the range provided in the software. When an appropriate percentage is set in the testing threshold percentage, a testing threshold amount will be calculated. Now fill the number of key items and amount of key items field. Key items are those amounts in the total population which are above the testing threshold and therefore must be verified. After entering the key items, the software will calculate the sample size from residual population. For planning phase risk assessment, the fields, number of items tested, and amount of items tested will be locked. This is because at planning stage, no procedures are performed. Therefore, no items would have been tested. These fields will be unlocked when the risk assessment being done is of final stage. At the end, there is a field for entering any remarks if there are any. Now the record is ready to be saved. Press the Save button to save the record. It is important to note that only one CRA record can be inserted for one trial code for each stage, planning or final. However, some exceptions allow insertion of another record. Now to grasp this concept, we will add another record. We will add all fields as described earlier up to account title. Now we will add the account title. This time the difference is that the software did not automatically pick up the closing balance as it is population. This is by design, because for some areas, the population subject to audit procedures is not the closing balance but the transactions for the year. Therefore, the team member should write the population here manually. The software could pick up the debits or credits automatically, but they may not represent the complete population due to presence of contras or reversal entries. Therefore, the person will write the population manually. Due to this concept, two records in CRAs are allowed. One for debit population and one for credit. Which trial codes will be assessed on their closing balance or transactions for the year can be defined in the CRA rule definition form. Open this form from the side menu. Now, if a record already exists, we will load it and edit it instead of inserting a new record. But if no record exists, we will insert one. Press on the Add button to insert a new record. Now click on Trial Code column in the grid. Once you do, Complete Chart of Accounts will load in the selection menu. Select the one you want to change the behavior for. Now you can select three options for the inserted trial code. Manual population with 1 CRA, manual population with 2 CRA, or excluded. Manual population with 1 CRA will only allow 1 CRA record for this trial code, while manual population with 2 CRA will allow two CRA records for that trial code. If a trial code does not require a sample size because the audit procedures verify substantial portion of its population, then we can mark excluded as an option. In this way, the trial code will not appear in the selection menu in CRA form when the account title field is selected. This sums up the risk assessment process. Now, you can easily manage the process within the software.